Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As you can see, as I'm zooming in here, you can see that on Wednesday we pulled back towards my price target here, which was 330.56. That's that green dotted line right there. And while inflation is still up and the GDP is still slowing, we had a 500-plus point rally this week. And today we closed the end of the month, which the 28th is the last trading day of April. We closed that with a fairly significant green candle on slightly higher volume. Now, what does that mean for next week? Well, that momentum could continue. You can see that the oscillators are moving up. However, we do have a negative divergence here on the stochastic and on the CCI down here. But I do believe that we could make a move to at least test this resistance up here next week. That could be Monday and Tuesday. So my short-term target is to the upside, and then I think we will pull back. So I'll forecast the upside at 343.15. And then we'll have to see what happens with the volume. If we get a drop in volume, we'll most likely pivot lower from there. Now, that will leave us in a trading range from this support level down here, right around 330, up to 343.5. That is most likely where we're going to be stuck for a little while. Remember, we still have a banking crisis. I'll get to that in a moment. That's not going to be bullish for the markets one bit, so keep an eye on that. Now, for you option traders out there, keep an eye on the chart on the VIX as I get to that, because it's pretty phenomenal how we're now hovering around 16 on the VIX. It's pretty amazing how we have so much going on in the world and the VIX is still dropping. So this is DIA. Going on to IWM, you could see that we did hit my downside target on Wednesday. We pivoted up. Now, if you were following along with my midweek report that went out after the close on Wednesday, I said that there was a good chance that we would rally up to this moving average and possibly fill this gap here. And I still believe that gap will fill next week. However, we do have a resistance. It's going to look a lot like that channel that we have in the diamonds, but there is a resistance up here at 179.88. Now, that volume is slightly lower as the oscillators are moving up, so you have to keep an eye on that volume. So upside target next week on IWM is 177.89, and while we did hit that downside target, I'm going to keep that in place as that green dotted line is now acting as support. Again, upside target next week is 177.89, and then we'll have to keep an eye on the volume because I think we'll pull back from there. Looking at the Qs as we go alphabetical order right now, it's going to be pretty much the same scenario. We have a resistance area up here right around 323.26. We're at that right now. However, there is a very, very slight gap above the market, and there is a chance that we might fill that gap. So I'm going to go higher again, and then I'm going to put a pivot up at that level. So upside target for QQQ at 327.61, and then I think we're going to pull back. I'll put a downside target after that of 325 for the option trades out there. Keep an eye on the CCI down here. Look at how vertical that went in just a short period of time. We rarely see that, if at all. This is one of the first times in years that we've gone from such an extreme oversold condition to an overbought condition in a matter of 2 days. So that is actually a negative divergence because you can see that the highs are getting lower while we have a higher high on price. That is one of the most significant signals you could look for with regard to a bearish flag. Remember, I said it's a warning flag. However, it's not a trigger. The trigger will be found in the candle itself, the drop in volume, and then ultimately the pivot point on the CCI. So that is the Qs. Now, if we look at SPY, this is the S&P 500 ETF. You can see the same thing happening here. We have a resistance high right there at that level. I'll draw that, try to keep that as parallel as I can to the support level. We have an upside target right there is going to be 418.57. I'll draw that line and then I'll adjust that price so it matches my horizontal line. We came close to hitting that target and then bounce. Again, just like I said on Wednesday, there was a good chance we would bounce up to the moving average. We did that, and now we're testing these resistance levels up here. Again, this is a negative divergence. You see this high back here? That is a lower high than the most recent candle that we have here, and that is showing lower highs on the CCI. There's the negative divergence. Now again, an interesting thing and why I believe that we're going to go a little bit higher on the close. This was looking a little bit weak as we were coming into the close because it was selling off about an hour before the close, and then we rallied right up. There is no shadow above that, so we closed right on the high. That's a bullish Marabuzzo, and if that was higher volume, I would say watch out for a breakout, but because of the lower volume, I think we're going to go up to test that resistance and then pull back. Okay, so that is SPY. Now, as I mentioned, the VIX, here it is, below 16. It's really hard to believe. Now, we have the 0 day till expiration options. We have daily VIX now. We have a daily VIX that's come out. You want to keep an eye on that. I'll be talking about that next week as I compare the daily volatility with the longer term VIX, which is looking 30 days out. But this really is hard to believe. Now, this is a positive divergence. Notice we have a lower low in price, but we have a higher low in the CCI and a higher low in the stochastic. You see that? Now, there's very few things I make guarantees on, but I do believe we're going to go right back up to that 2120, and we're going to hit that target. Now, that would be a significant percentage move from just below 16 up to this level 2120. So for those that trade the volatility index or those who trade UVXY, consider this to be a bullish flag in that positive divergence, but you're still going to have to manage risk on that trade if you take any new long positions in the VIX or any instruments that represent the VIX. All right, so last week I talked about Zimbabwe's central bank issuing a gold-backed digital currency, and I also talked about the central banks buying 52 tons of gold in February. But this is a new development. This just came out this week. In fact, it came out yesterday that Argentina says it will pay for Chinese imports in yuan, or also known as the renminbi, instead of dollars. Now, this is, again, the continued attack on the U.S. dollar. I think this is the big sleeper story, and people are just really not paying too much attention to that. But if you look at the volatility index in the open interest in June, we have massive open interest at the 30 and 40 strike prices. So I think May is going to be extremely challenging for the bulls. I think it's going to be very exciting for those who trade, especially swing traders. And it could even be a little frustrating for option traders, because when the volatility index drops like it has, all options, including the long-term leaps, also drop in value. So a lot of the spreads that you might be putting on could be looking as though they're in trouble. But I'm telling you, when the VIX starts rallying back up, all that volatility is going to pump back into those options, and the deltas will kick in when the markets drop as well, especially for those who hold the put spread. So I'm just doing more or less a shout out to some of our members beforehand. So I'll be doing a call on Monday night to talk more about that. Now, this is another recent story, came out yesterday. I want to thank two people. I want to thank John Kuntz, and I want to thank Gino. I'll call him Gin Man to protect his privacy. But, you know, we have members that are sharing information with us, and I get this all the time. We have people scouting for information. And with that said, I'm going to encourage each and every one of you viewers, if you have an interesting post or a news item or a headline, put it in the comments page so that we can share that news with all the other viewers, because we're not getting all of the news. JP Morgan believes that we're going to see the S&P, it could hit down to 500 by early summer. Now, keep that in mind, because the timeline, again, for the VIX expiration is right around June. Early summer is, July 4th, maybe into mid-July. And JP Morgan is looking extremely bearish here. If you decide to take long positions, you're going to have to make sure you're managing risk. Here's another story. Again, came out through Yahoo Finance. Is absolutely phenomenal how U.S. economic growth is slowing to 1.1% while inflation accelerates. And what happens? We rally 530 points. I see this more as manipulation. I feel that the rug is going to be pulled out. That's just my personal belief based on what I'm seeing in the technicals, because this is exactly the same setup that we had in 1999 into the crash of 2000, and it's the exact same setup that we saw into 2007. People believe that, oh, we're back into the bull market, and then boom, the rug got pulled out, and we went into massive selling and eventually capitulation into some significant bearish downturns. So that is feeling familiar right now as we look at the markets. And next week, do another look at the monthly chart so you can see how that setup is playing out. So with that, you have a good weekend, and we'll talk to you next time. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here, and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol, using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.